Hopefully, you all have been enjoying the Friday Financial Four that we've been putting out every Friday for the last month or so. What I wanted to do something new today is introduce a chart of the month. And so throughout the week, we get and we get a lot of questions about different aspects, right? So whether it be economic or market related. So what I thought I'd do is something new is use one of our resources that we can use with clients to talk about a specific area of the market or some sort of financial concept or investing principle. And so this way we are trying to mix in some of the important things that are on your mind along with sort of big picture retirement planning questions. And so this month, for the month of August, I wanted to talk about investing at all time highs. And so the chart you see on the screen is from the JP Morgan Guide to the Markets. This is a booklet that they put out. They actually update it now daily, but they put out a physical booklet every quarter. And it has a wide range of basically visuals and charts talking about all aspects of the market. And so this particular one I thought was really interesting because this is a question that we've been getting a lot from clients. And especially with clients currently either retiring or going through life situations where additional funds are coming into the household, whether it be receiving inheritances, or retirement, doing retirement rollovers, or having ample cash savings in the bank. And with bank rates and savings rates starting to come down, looking for better rates of return, possibly in the markets. And so we get a lot of questions and concern about the headlines of today was at all-time high, or we're at all-time highs, or the market's really expensive. Should we be putting our money in the market at this point? Should we wait? The one question we always get: should we wait for a big pullback or for the market to correct before we put money away? And sure, that is one way to go about it. You can always obviously look for better opportunity and better pricing. But why I thought this chart was very relevant right now is because we are going through market highs, that the principle itself of investing at all-time highs is the result of actually doing that are quite counter to what you might think. And so on the left-hand side of the chart we have here is market at all-time highs and market floors. And so a market floor is defined as an all-time high that never retreats or falls below 5%. And so you can see in the gray, the S&P 500 index is kind of moving along. And then in the green is that dot of an all-time high that sets a new market floor. And so as you see, if you were investing in points of time of all-time highs, you can see that it is in trend with the market. Ultimately, market highs beget more market highs because, again, generally market highs come in clumps or they come in groupings. And so on the right-hand side, you can see the average cumulative S&P total returns. In the gray, we have your market returns if you were to invest on any day in that year. And then again, these are rolling periods: 3, 6, 1 year, 2 year, 3 years, 5 years from your investment point. But if you were to invest at all-time highs, what your accumulated return might be. And you can see the green bars over different subsets of time periods continue to trend higher than if you were to invest on any other day. And so ultimately, what point we're trying to make with this graph is that even though, yes, there is inherent additional risk when it comes to putting new money into the market, as there always is, the concept of investing at all-time highs might not necessarily mean that you're setting yourself up for a bad experience. Ultimately, a reason and a principle that a lot of clients and investors make is that they use market all-time highs as a reason to stay either out of the market or not investing in the market. When we can see from the long viewing statistics going all the way back to 1950 that investing at market highs doesn't necessarily show that. So again, just a concept and a thought-provoking process to kind of go through the data points of these concepts. Happy to answer any questions you might have. Hopefully you guys enjoyed this month's chart of the month. Follow us along in September where we'll bring another chart, a deep dive onto another chart.